What is a journal entry in accounting? My name's Kirsten. I'm here to help you learn accounting. So a journal entry is basically just a record of every single financial transaction that happens at a company. Every single company uses an accounting system with journal entries to keep track of everything that happens in the business. Journal entries will always impact at least two accounts, sometimes more than two, but at least two. And you might have heard debits always equal your credits. Well, that's true in journal entries. There will always be at least one debit and at least one credit, and they will be even. Journal entries specifically represent changes in some type of account. So when there's a journal entry, it means there has been a change. It's not necessarily the ending balance in an account, it's a change in an account. Now, when we're building our journal entries, we need to make sure that one, our journal entry balances, so debits equal credits, and we have to know what exactly is moving. So before you even start building the journal entry, you should be able to ask yourself, what two accounts are impacted by this particular transaction? So say I purchase land with cash. Well, my two impacted accounts are going to be land and cash. Now, the next thing to ask is, are these accounts that I've identified going up or going down? Are they increasing or are they decreasing? That is going to tell you what you need to know in order to build out these journal entries. All of these journal entries impact the accounting equation, which I've talked about in a previous video. So assets equals liabilities plus stockholders' equity. So back to my example, I purchased land for cash. Land is an asset. Cash is also an asset. Land went up, I purchased it. My other asset, cash, went down. That all happened on the same side of my accounting equation. It happened all within assets. So because assets went up and then they went down at the same exact amount, my accounting equation stays in balance. Now, what if I purchased land with a note payable? Well, a note payable is a liability. So my land, my asset, has gone up. What else has gone up? My liability, which is what I owe, has also increased. So instead of having all of my changes happening over here in assets, now my assets have gone up, but my liabilities have also gone up by the same amount. My accounting equation stays in balance. Once you've identified what accounts are impacted and what direction they're moving, the next step is determining whether those accounts are impacted with either a debit or a credit. That's it for this video, but if you want to check out my other pinned video on how to build a journal entry, I go a little bit into debits and credits, and I'll also talk about those in another video soon. That's it for now, and let me know if you have any questions.